Host of the More We Know podcast for the Gen Zs and Millennials. I know I say that. I say it's for the Gen Zs and Millennials. And yeah, although that is the focus, this podcast is really for anyone. But I look back at my time in college and I wish I had something like this. I wish I had a podcast where I could learn from mentors or experts in their industries or, fellow Gen Zs that are talking about real world topics, that are talking about what is a credit card APR, what is investing, what does all this mean? What's going on, everybody? Welcome back to the More We Know podcast. So I haven't dropped in a few weeks now, and the reason being is because I was out with COVID, guys. And I know, speaking to you guys, I don't have a gigantic audience on YouTube yet, but I'm envisioning it, right? I'm envisioning the law of attraction that I will get there, that I will build a huge audience of people getting a mentor in your pocket worldwide. So my name is Mir. I am your host. I graduated college in May of 2019, and last year during the pandemic, I launched a podcast called The More We Know because I was thinking about it, and I was thinking, isn't life about information, like learning more, whether we want to learn about stocks, investing, jobs, medicine, whatever it is? Isn't it all about knowledge? Whether we're already millionaires, whether we're in whatever field we're in, isn't it all about learning more? So that's why I launched The More We Know. A lot of us were not blessed and fortunate to have mentors. So in this podcast, what I'm here to provide you is in an hour or less, get you a mentor in your pocket. So today's mentor, without further ado, I will introduce now. What's up, everybody? Welcome back to the More We Know podcast. I am your host, Mir. Welcome back to another episode where the goal here is to bring you mentorship from experts all around the world in an hour or less. Today we have Joel Primus, who is an entrepreneur among other things, but he's also the founder and creative visionary behind NAKD Underwear. He helped raise over 17 million establishing retail distribution at Holt Renfrew, Nordstrom, Hudson's Bay, and Bloomingdale's. NAKD completed a merger with Australian-based industry powerhouse Bendon Lingerie, exiting in 2018. Recently, Joel co-founded Cozen, a travel clothing company which launched one of the most successful Kickstarter apparel products of all time, reaching nearly 1 million in sales in 30 days, guys. That is amazing. He was one of the inaugural BC Business Top 30 Under 30 entrepreneurs and is also the author and an award-winning documentary filmmaker. He also has a book out on Amazon now, Getting Naked, The Bare Necessities of Entrepreneurship and Startups, is a life coach, just does everything, man. You do everything, Joel. What's going on, brother?
Hey man, thanks for having me. It's a rare sunny day in my winter up here. So
I know, right here in Chicago, it's been snow after snow after snow.
yeah, that explains the MJ tribute behind you.
Yep, exactly, right? Exactly. Michael Jordan, he's the motivation and inspiration always.
He is the goat of goats.
Exactly. Yeah, he is. So I was, you and I were having a conversation before this started. I heard you on Clubhouse for 30 minutes. We were in one of those stock rooms, and I was just like, wow, this guy brings so much value for him to come on this early morning Clubhouse and just talking about IPO processes and everything. I was like, wow, it was amazing.
It was my pleasure. It was an interesting moment in time, right? Because this democratization, I know say that sounds weird, but like this democratization of the stock market, right? Where all of a sudden we see this shift to retail, but it's investing, but it's a redefinition of retail. It's not retail like it was before, where like, your broker and your high net worth, it's like high school kids, $50 at a time. Like it's a whole new world. And so it was an exciting moment the whole world tuned in just show you why it was so important, right? And where we go from here, still to be determined, I think.
Yeah. Now your company is definitely it's an interesting in time for sure. Your company, NAKD, which is the ticker NAKD, drew a ton of interest from Wall Street Bets. The podcast audience, we get 1,000 plus listeners a month, is Gen Z. So when I posted you on my Instagram, everyone's talking about, wait, so he's the guy from the ticker NAKD. I got, I was loading up on equity there. It was awesome. Talk about that real quick.
Well, I was really excited for them because obviously, well, not obviously, but for those who don't know, I had sold the company 2 years prior. And, over the course of, I think we were public for maybe 5 years prior to me selling it. And it's such a struggle when you're battling short sellers, when you're considered a nano cap company inside this great big world of massive companies, and to get attention and to use your stock as it's supposed to be used, which is one, to provide liquidity, two, to provide the optionality for somebody to come in and invest in your company, and three, as a secondary currency to cash, to complete mergers and acquisitions, to entice talent, to raise money based on, again, the security that there is liquidity. And so when your stock is not performing, all those things fall through the cracks. I remember we'd gone through the exercise of this great big merger. We'd merged with $100 million company, and the whole mandate that we set forth was M&A. And then all our M&A targets start to see the short sellers and start to see the fact that our stocks, going down. And next thing you know, those targets don't want to do business with us. And so it's really challenging in that environment. And so I knew that the company had struggled for years, and to see that, when they got thrown into that, and then they were able to raise, God, I think it was like $100 million they took off that. That's when it's the company's job they took advantage of their moment. Now go execute that business, right? Because you just were given a gift.
Yeah, that's amazing, and it's a lot of complex terms there for the audience to understanding mergers and acquisitions and raising money. But obviously, you weren't always on the stock exchange. Let's take it back. So, can you rewind us in this journey? How did you start Naked? Where did the idea come from, inception, and what was the path when you started this? Because I know, did you think right away that it was going to become $100 million+ company and become on the public markets one day?
Well, I didn't even know what the public markets were when I started Naked. So that so as I mentioned on that Clubhouse that you and I were on,
Mhm.
I grew up very humble beginnings. My parents did not invest money. That was not a dinner conversation. Money was viewed very negatively. That it was viewed as scarcity, lack thereof. We need to save in order to, make it to our death. And I had to shift out of that mindset as I became an adult and started to find my own way. And then you latch onto the heroes like, the Richard Bransons, the guys who rose from rags to riches, etc. But my first passion slash pursuit was running. I was an elite runner, and I I had a full scholarship, and I and I was on Canada's world team, and then I blew out my Achilles and I lost it. And so I had to reinvent myself, and I didn't know what to do, to be honest. I was actually a college dropout at the time, and never ended up finishing, but I was traveling the world, and I was in Peru, and I needed some underwear. And I bought this like incredibly soft Pima cotton underwear from a street vendor. And I was like, wow, this is like way better than anything my mom's ever bought me. But then I hiked up Machu Picchu, and I was like, that doesn't really perform all that well. And so I said, how do I take the softness and marry it back to fabrics I was used to as a runner, technical fabrics, and create something that was so comfortable you didn't feel it, hence the word naked. And so many entrepreneurs that I know and or that I coach, it's always, or more often than not, it's that need for yourself that inspires this idea to try and go out and create something. And so it was, I didn't know how to sew. My friend's grandma sewed the first pair, and then I did what I call taking a leap. And that leap was taking this very, very not well thought out idea in a very early stage, and I went on Canada's version of Shark Tank. And for your listeners who know Shark Tank, Kevin O'Leary, Mr. Wonderful, he's actually Canadian. He's on the Shark one. He's on ours. And I got torn to shreds, man. And I was in my underwear on national TV with a ridiculous valuation that I'd asked for them to invest in the company at, and I deserved it. And that was really, I think, I'd taken this leap. I'd crashed and burned hard. And that's where I had the moment of, I have to get better, no more, be better if I want to make this thing successful. And that's really when the trajectory changed towards where it ended up.
Yeah, what an amazing story, and such a gem there for the audience, because you touch on that importance of, you saw the need for yourself. I hear so many stories of different entrepreneurs. Even had one guy who has a $10 million+ company now called At Your Gate, where they deliver food to your gate at the airport because he couldn't get food and he wanted it and he was in a rush. So to hear your story where you could, you found that pair of underwear that felt so good, is phenomenal. And I think that's where a lot of entrepreneurs struggle, which is the fact of where do we get started? What's the idea to come up with? Well, look in your backyard, look at the issues you struggle with daily. So thanks for
Yeah.
sharing that. I guess the one question I would have, especially in my generation, we struggle with, especially now, I want to say it could be due to social media, it could just be due to the influence in the generation. When we get torn to shreds, whether it's, potentially, on your level, a Shark Tank level, or, getting a bad grade, or your parents telling you that idea sucks, we take it very personal, and it actually demotivates us. We close it down in a world where you can post on TikTok and a million people can see it tomorrow and they can start writing you really mean things. How did you get torn to shreds like that? Right. As you said, but still bounced back. Like what qualities did you have there that helped you bounce back and continue to maintain that confidence and build the phenomenal company you built?
I think that we're the same generation. Don't let my gray hair fool you.
Yeah.
um, you're you're millennial, right? Or Gen
No,
Z?
no, Gen Z. So we're like 18 to 23.
I think
Are you
notorious.
24?
I'm 34.
Okay.
I think notoriously though, millennials are more insecure than Gen Zs from what I've seen in my life and read. But so we're anyway. I mean, your point is the same. Is that when we're broken down through a negative comment, what do we do with that, right? And there's a really big answer to that question, and I'll try and keep it as tight as I can. But it is essentially the premise of my book, this idea of getting naked and getting back to who you are on the inside. Because as we're raised from kids, all our lives, we are told concepts about how we should understand and interpret the world, right? And those concepts keep everything organized. The most simple one, you brought up grades, is get good grades, go to college, get a safe job, get a 401k, and that's the way you should live. And that is a very safe way to live, and there's nothing wrong with it. And it's also the way that the powers that be want you to live because it keeps things organized, right? But alongside those concepts come labels. Okay. Labels being I am smart or I am not smart because some grade 6 math teacher told me I wasn't. And I carried that with me my entire life. And that's just one of what I have found to be usually dozens that stick with us, that we carry these negative I am associations, some of which we don't know, some of which we do know. If we're told we're smart, we tend to think we're smart. If we're told we're not, we tend to think we're not, and we limit ourselves because of these things. But all the concepts and all the labels, they're just things somebody else put on us. They don't represent us. They don't represent our souls. They don't represent our hearts. They represent the faults of our teachers, the faults of our parents, the faults of our peers, even projecting, and we're getting technical here, but they're projecting their own crap onto us. And as such, it just continues on and on. And so I believe that entrepreneurship provides the opportunity to do a lot of inner work where you are constantly faced with circumstances that challenge you and force you to look at yourself and how you're acting in that circumstance. Or what? So take the example of me being called delusional on television. The question I have to ask is, do I believe I'm delusional? And if the answer to that question is yes, then the next question is why? Why do I believe I'm delusional? Who told me that I should believe that, right? Somebody tells us we're not good looking. Somebody tells us we're not smart, and we believe these things. And we build our lives around them until we shatter them, until we break through. And entrepreneurship provides that every single day in our lives. It provides us so many opportunities to face ourselves and our own triggers and insecurities and reinvent ourselves and build this solid foundation of our character so that when we face those things again, when somebody tells us again that we're delusional, we don't believe them. It's just slides off. So I wasn't ready at the time. And even today, I mean, it's so much worse. Like one guy calling you delusional versus 100 people telling you suck on Twitter or whatever, it's the same difference. And I have just gone through so many years, and that's why I have so much gray hair, of trying to focus on, well, why does that bother me? and how do I change that or let that go? And that's the inner work that I think builds the foundation so that we can be successful and happy entrepreneurs and people.
That's really powerful. I love that mindset shift too. Just great points all around. Now, would you say what did you do after that episode? Right, you were on the Canada's version of Shark Tank. What did you go home and say and do? What was the next steps?
Probably sulked for a week or two. I mean, it's okay to be knocked down, and it's okay to stay down for a minute or two. And then when you get back up, you leave it down there, right? And so for me, that was it. It was like, well, I would say that the ego probably also kicked in and was like, no, I'm going to prove this dude wrong. I'm not delusional, right? Very to honor the man behind you, Michael Jordan. What did he do? We all watched The Last Dance. He made up stories of people calling him out who never even did, just to use it as fuel to his fire, right? The danger there, have to be able to understand that it's okay to use a little bit of that anger as fuel, to use a little bit of that rejection as fuel. But if we're solely then motivated by that rejection, we're not really operating from a very good place. So you got to use it, and then you got to say, okay, now, I'm good. I don't need that anymore. And does that make sense, Mir?
Yeah, so if I'm hearing you correctly, rejection and hate can serve as that temporary fuel. It can serve as that foundation to help motivate you to push through the barrier. However, you can't have it be the internal and only factor. You need to have some type of from within.
Absolutely. Because if you think about it, if we are operating from that rejection fear, we are operating from our insecurity, right? That
Mm,
is what is fueling that. So maybe a simpler way of explaining it. And so if we continue to operate from our insecurity, nothing will ever satisfy us. No matter what we do, we will have only, we'll have got to the other side of whatever goal we will have achieved, and we will not feel fulfilled because we weren't doing it from the right place. We were doing it from a void and a hole in us. And if my life has taught me anything, it's that when you achieve a goal, it's generally anticlimactic. You know, at, maybe not in the exact moment, but very shortly thereafter, because that's not what life is. Life is the moments building towards that goal and the next one, and being present in those moments. So I know this is like maybe not is way off, but
I think this is really good. This is a lot of insight and a lot of value. Again, this is mentorship in your pocket, whether it's about building $100 million company, $1 billion company, or the mindset and the tools that you're giving us right now is a ton of value there. So at the peak of NAKD, when you sold it, was it at that point, if you are able to share, was it $100 million company? What was the peak of the company?
no, I think I can't even remember. We were in the double digits in value. Um, but I don't remember what the exact value was, um, because we were kind of like gobbled up, and it wasn't what would be considered a traditional buyout. We all NAKD shareholders received shares in the new company at the value of which was deemed, I think it was 13 million, but I could be wrong. I think it
Mm-hmm.
was 13 million at the time, but yeah.
Yeah. So definitely, I think we're going to talk about the equity stock process, because a lot of my audience is also on the financial. They love stocks, so we'll get your
Yeah.
insight there. But I think just to finish our points there about the mindset and fulfillment, when you had that acquisition, and whatever way you call it, even if it was not a typical acquisition, when you made that money, you talked about short-term satisfaction, where it's only short-term. What was the feeling like for you when it was finished? You built this and you made that money. What was that feeling like?
It was incredibly anticlimactic, and I always tell people now, I didn't then, that I was completely riddled with anxiety and I was completely depressed. Not in part because you're selling your baby, if you will, the thing that you've built from the ground up, and so you feel like a part of you's gone, and then you feel like, well, what the heck do I do now? Who the heck am I outside of this thing? But these things are never clean and easy. There's no, like, when you get to the point, I've been involved in multiple mergers or multiple sales, and they're always, there's plenty of wonderful things and there's plenty of warts. And it's good and it's messy and it's never very quick. That sale took 18 months. Like, that wasn't like a, oh, we want your company, let's buy it. There was 18 months between the due diligence and the fairness opinions, which, is third parties validating the transaction and getting shareholder approval and almost not getting shareholder approval. And the cost of it, the cost of a thing is the amount of life you exchange for it. That's somebody's quote. And so for me, my marriage was on the fritz. I had barely seen my daughter because I was so absorbed with my own pursuit. And there's nothing wrong with being absorbed in your purpose. But without that balance, despite this outwardly, this outward success, the internal side and the home life was the cost I paid. And so it didn't, or wouldn't have mattered what the dollar value was if these things had fallen apart. Right. And so I had to reconcile as best I could and change the way I did things.
Now, does there have to be an opportunity cost between home, personal, love life, and monetary values and gains?
Well, yeah, I mean, there always is. It's just a question of how much balance do you strike. It's like, can you get better at a sport without practicing it? Can you make a muscle stronger without breaking it down? The answer is no. You have to go through that. It's a question of, can you come back to your center? Can you come back to your balance? Can you ebb and flow? Can you work like a nut for a month, a year even? But can you come back? And this comes back to the insecurity. That comes back to what's fueling you. If the other thing is more important, then you'll watch all this wreckage along the way. But if it's not, if it's of equal importance, then you can absolutely have both in balance. But it's not like splitting an apple in half, right?
Yeah.
It's not like just a clean break. It's finding those moments of balance and finding that presence when you can and maximizing it.
Yeah, that's amazing. And if you could go back right now and tell your younger self, between your relationship life at home and building a company, is there anything you would have told yourself to do differently?
Oh yeah, brother. I mean, it would have been slow down. It would have been stop trying to be, I had this delusioned idea that I'd have a unicorn. It was never going to be a unicorn. And the reality is, you hear Mark Zuckerberg's unicorn, you hear whatever. And that takes you out of what you're doing when you're looking at this, like, I want to be this one little thing that 2% of the population's ever achieved, instead of just like really enjoying the work and the team and the process of building something. There's always going to be a certain amount of angst towards what you want. And that's the tether between you and this invisible goal. But I've just, then it's over and you're like, whoa, that's gone. Did I enjoy that? I think I did, but I don't, you know what I mean? Because you're not there. You weren't in it. And so I would just tell myself to just go slower and be in it. Right.
Yeah,
So,
that's really powerful advice. Go slower and be in it. Wow. You made the comment that what the 2% achieves, that unicorn status, that billion-dollar plus status. How did you get to that point of yourself? Because as an entrepreneur, right, there's a certain sense we have of stubbornness, of not believing what others are saying, rejection, haters, etc. What type of level did you reason with yourself, saying, "Hey, we're not going to reach that type of valuation"? Where did you find that?
so I didn't find that in Naked. And the 2% number it's probably way less than 2%. I
Yeah,
just
yeah,
there's a
yeah.
chunk there. But um, sometimes we can be so blind, and I was blind. I think even when I sold the company, I was blind to that. But um, as companies, went on afterwards, new things I started, and especially COVID, um, and seeing how I don't have control over anything except for the attitude I have, and the effort I bring, that it kind of just showed me that like this idea that like somehow I'm entitled to this unicorn thing is ridiculous. And so I dropped it. And now it's all about base hits. Even with companies, even if I'm starting and selling a company, it's about a base hit. It's not about it. If it happens, great. But that's not my plan anymore, right? So
your effort and your mindset. That's amazing to hear, because that's only things we can control. We can't control when the next pandemic comes, or what happens in tomorrow, the elections, right? Whatever it is.
yeah.
So that's amazing to hear. Now, shifting away from mindset a bit, let's talk about the process for a little bit, just about, if it's all right with you, about building a company. So you built Naked. Obviously, it was baby steps. What was the process like? Because there might be Gen Zs or college kids listening now, and they want to start the next company, and you're inspiring them. They might have just got your book on Amazon, and they're reading, and they're like, you know what, I want to start a business now. What's the process like? I mean, where do you start? I know it's trivial. Did you start with making an LLC first? Did you start getting some lawyers? Like, what was the process like?
Yeah, I mean, it's always very messy to start a business, and not in a bad way. And we need to make a prototype. Oh, we need to get a trademark. Oh, we need to start an LLC. And you kind of just have these realizations versus doing it as a process. And no matter how many times I've seen somebody try and do it as a process, it always ends up very, diluted and chaotic. But the reality is, the way I tell people to go about things now is we're in the day and age of testing ideas. Test your ideas, and don't just test them on your family, because I tested ideas on my family, and my family obviously loves every one of my ideas, and some of them are pure garbage, right? So it's all about, now to me, you have this idea, you talked about it, like the airport idea where it's like delivered to the gate, my underwear, whatever that need is. And this idea is, I say, it lands on your heart, right? There's a moment in time that you're present enough to realize that, oh, there's a hole here, and I'm the one who wants to fix that hole. So the first test of that idea is, I just thought of it. That probably means somebody else has thought of it. So go and see if that idea exists. And if it does it exist in the same way that you're thinking about it? Can you find a point of differentiation to enter the market? And if you have found that, it's all about what's called product market fit. It's all about understanding whether or not that idea is the right fit at the right price at the right time for what you're trying to do. Because if any one of those variables falls out, if it's not the right time, I have a travel company that obviously was a dog's breakfast during COVID. But 1 year prior, when I started it, when it was the biggest travel year in the history of, the human race, it was a great time. So you take out the factor of time, and a good business concept becomes a very bad and expensive business concept to put into place. And so you can test those ideas by R&D research. Doing really good research can give you an indication. Doing really good focus group work, but the best way to test it is to see if somebody's willing to give you their dollars for it. So platforms like Kickstarter are great ways to test something like that out, or Indiegogo for that matter, right? Is somebody at the end of the day, when the niceties are done, willing to hand you over their hard-earned cash for that thing? And if the answer is yes, and it's fairly easy, and I genuinely mean that, then you've struck product market fit. And this is what venture capitalists look for, right? For venture scale businesses. I've never had a truly venture scale business, that being like one that is they literally put in $10 into Facebook ads, and they sell $1,000 worth of the thing, and they just keep doing it. It scales so fast. If you can just micro test that, and it gives you enough of an indication that your idea is right, and it's not just your own ego or your own wants and needs. And the flip side of that, I'd say, is like, there's lots of music in the world, and that doesn't there's plenty of country singers, and it doesn't stop another country singer from doing music, because you do music because you love it. And I believe you can do the same with entrepreneurship. But if you don't find that differentiation, you might not ever get funding or scale. So getting those things in order, and then this is a point we could talk about for hours, and then locking in on your process of developing and bringing something to market, because that makes or breaks companies, not brand, not whether your brand is good, whether or not you can profitably, without error, get a product to your customer and they don't have any issues with it. To me, is the biggest piece of the puzzle. And then you get to backfill that with a great brand message, a great why, all that other stuff. But it does, in the early days, I think, come from really good product development and execution. And I'm the master of messing up products. So anyway, I'll stop there, in case, because I know that that's a really big question. There's a lot to that. There's a 250-page book that I just wrote. Is a good chunk dedicated to just that starting window, right?
Yeah.
So
the two biggest takeaways from that is supply chain and customer service are early on the most important factors. Yes.
Well, making sure you have product market fit.
Yeah.
Is once the market is there for that product that you're doing at the price you're doing it. And then that supply chain, right? I'm not saying you can't fail, but once you've landed on something you're trying to bring to market, that's when you don't want to screw that thing up. You fail in the innovation stage and the research and development stage. You iterate from those failures, but once you're like, this is the shirt I'm building. If I mess up this shirt, and I messed up 20,000 pairs of underwear that didn't fit any size larges or size extra larges, because I was trying to be cutesy and innovative, but I didn't follow a really good product development process. And so it was never tested on those sizes. And no guy who was a large ever wore it. Just small guys did. They had no problem. And I missed them, Wow. So that's where it's like your supply chain, but your process of managing the errors within that is in just delivering a quality product. Because I think you got two chances with a customer. If they really like your brand, you got two chances. If they don't really like your brand, you got one chance. You mess up that chance, you're done.
Wow. Yeah. Cutthroat, very cutthroat. Right. That's an amazing insight, though. In terms of with NAKD, when did you have the aha moment where you had some product fit and you knew, yeah, there's a market for this?
So it's back in the day.
You're not that old.
I know, but think about the last 10 years, man. Think about when I started NAKD, the first investor I ever pitched laughed me out of the room when I said I was going to do an online only business. Right?
Oh my gosh.
It might be 14 years ago now, but the point is, that's not that long ago that concept was like, dude, what are you talking about? And now, that's all that there is. So to explain that point better, the decision of whether or not you had product market fit was made by the buyers of department stores, not yourself. They were the ones that would say, we think this can sell. And then they put it in their shelves, and if it sells, but they were the indicators. And so for us, once we had buy-in from the buyers and we had a healthy enough sales traction, it wasn't as easy, because now I use it as a metric of what's called ROAS, return on ad spend. It's like, if I spend $10 on Facebook ads and I get 30 out, I have a 3-to-1 ROAS. That's a really healthy number. And I couldn't monitor those things back then. So it was just kind of, how is it trending and tracking with these buyers and at the store?
Yeah, I was going to follow up with that and say, isn't it easier now for entrepreneurs in this generation with Facebook ads, with all the social media analytics, with what you're bringing up with the return on ad on Facebook? Isn't it easier now in some sense to make it with your business?
Yes, it certainly is. And it's certainly easier to go find your customers, right? I mean, Facebook, Amazon, they make it as easy as possible to go find your customers. But the challenge is, from what I've seen, it's also very saturated and it's very noisy. And what I mean by noisy is you have so many influencers, you have so many brands, you have so many people on so many different platforms, social platforms, advertising platforms, that it becomes very challenging for brands to do what my partner and I call seizing the microphone, right? So just imagine you're in a protest or some sort of large event with lots of people outside, and you have something you want to say, and you think what you have to say is really important and everyone needs to hear it, but you're yelling it, and because there's so much noise and chaos, nobody can hear you. But there's one microphone in the whole place. How do you get that microphone, seize it so that you can be heard? That is, outside of making really good product that people like, that is the battles, then being heard in this incredibly noisy world.
How did you get your microphone with NAKD?
Well, Dragon's Den helped. So being on national TV back in the day, again, like 3.2 million people watched that show, and it was on 4 times, and we actually got to go back on for a second chance. And so it was because of that show, just having been seen in that environment. So they gave me the microphone, and NAKD would, I don't know if it would be without it.
Wow. Wow. So you took that opportunity and leveraged that. That's really unique, actually. Kevin O'Leary, for example, from Shark Tank, always talks about when a lot of these startups come on, he always says, what stops me? What's proprietary about this? What stops me? I have more money than you from launching myself. So, and a lot of companies go through that. You hear about stories with Amazon taking ideas from people, or Facebook, because they got way more money than the average entrepreneur. What can you do? What's your insider advice for entrepreneurs when there's so many big sharks out there and a lot of us don't have the same money or access that they do when launching a brand, a business, etc.?
Yeah, dude. That's a divisive question, because Elon Musk's answer to that question is, so what Kevin O'Leary's talking about is a moat strategy, right? So a moat being the thing that protects the castle from invaders, right? So what's the moat of your business? And in many cases, people think that moat is like your IP, your intellectual property that nobody else can steal, or your technology is so advanced that they couldn't even duplicate it if they tried, right? Whereas Elon Musk's answer to that question, if I'm correct, is he doesn't believe in moat strategies. He believes in rate of innovation. How quickly can you innovate and iterate, because the market is changing so fast? And so I never worry about, I get asked that question all the time, and certainly angel investors will not invest in me in certain products I've had because they didn't see the right moat. And I just look at that and I say, like, what was Lululemon's moat strategy? Lululemon is a $4 billion athleisure company in a market. Sure, they were first, and they did get a bit of a running jump before the rest of the world realized that, oh, athleisure is really cool. But plenty of people have followed them into that market, and Lululemon just keeps growing exponentially because they do what they do better than everybody else in the market, which I think is where, in part where Elon's going. And so that's always my strategy, or sorry, my advice is, don't worry about what other people are doing. Google was the 14th search engine. Okay, name the other 13. I think, we can all probably think of one prior to Google, right? And now what, we have 4, 5 that we really use: Firefox, Safari, Google, Chrome, etc. But like, really, number 14, they didn't have to be the first. They had to be the best at what they did. They aren't the only search engine in the market. They don't have a moat on search engines, but they innovate and they provide the best product in the space, which is, I believe, in part their argument against the antitrust claims against them, is like, no, we're just better. We're not prohibiting. Now, I don't know if that's true, that they're not prohibiting, but so again, to your point, I just say focus on building the best product you can make first, delivering the best service and being very expedited with it before you worry about whether or not you're protected against copycats, because it's really hard to get everything right in a business. So somebody who's going to copy you, they have to do a lot of things right. And and uh, and so I don't think it happens as much as the stories
Yeah.
make it seem. If that
Okay.
makes sense. Yeah.
Yeah, yeah, that makes a lot of sense. Even in real world within your own business, again, not to continue to bring it back to Naked, were you ever worried about a Hanes, for example? Like, oh, what if they see mine and they just want to make the same thing?
Well, everyone did. Calvin made the same thing. Haynes, no, it wasn't Haynes. It was one of the like Jockey or whatever. I mean, even some of my department stores made something very similar to what I
Yeah.
had, you know. And so did that affect my sales? Maybe. But I think that the only reason it would have affected my sales is because I didn't do a good enough job with my own brand storytelling, my own product execution, speed to market, all those things. It's
Mhm.
not on them, it's on me. If that is the case. Yeah, like, you know, underwear is really not that differentiated. Like, yeah, mine was a bit different, and there were some others who had some interesting tech, but at the end of the day, it's a waistband and two tubular fabric pieces that go down your legs and a gusset in a crotch, and it's how good did you do that, and how did the delivery of that make the customer feel at the end of the day for the price they paid. And that's going to win time and time again, not whether somebody copied me exactly.
Yeah.
So
Yeah. How important is the face behind it? Because when I'm listening to you talk, just like when, you and I were in that clubhouse room together, you just have such a authentic nature to you and so genuine and such ownership and, self-humility, everything. So that's amazing. Do you think also it impacted the brand because of how, great of a person you are too? Like, do people invest in the entrepreneur or buy the brand just as the entrepreneur as well?
the jockey or the horse, right? That's the old, that's the old. I think in the early stage. So let's separate that to raising money really quick.
Yeah, yeah.
In the early stages, it's just as much the jockey as it is the horse, because it's the jockey has to bring this thing to life with very at-risk dollars. Like the dollars that go into an early, the amount of failure points are so massive that, and the landmines that they have to, face along the way, that it's like, is this jockey going to take this great horse? Does that, how much later does that, or how long does that continue onto the customer side? I don't think that anyone ever bought Naked because of me, but I certainly think you fly Virgin because of Branson. And I certainly think in part you
A
buy
Tesla.
Tesla because of Elon, whether or not, and I certainly think that you are boycotting Amazon because of Bezos right now, whereas 10 years ago, 5 years ago, no, he was like, God. And so I think that there's certainly an interplay with when a founder's identity is woven into that brand, and companies that are known for innovation, and or again, his character or her character's baked in. It sometimes can be challenging, but it also, and that can be a good thing in some ways, and it can be challenging in others, right? Because what if we use the Bezos example, but if you're trying to sell your company and you're not going with it, how much value do you have? So I always, and my partner always talked about, we need to separate ourselves as quickly as we can from Naked. Otherwise, the sale of Naked isn't as possible, or isn't worth as much as it would be with us attached. And if we're trying to exit, so there's things to think about. I think it's just very situational.
Yeah, I think it's actually a very interesting point that you bring up there. I was doing one of those stock rooms the other day and hosting it, and one of the things I brought up to be careful with, and again, none of us are ever bringing investment advice here, just a disclaimer, but I was talking about Tesla. We saw this exuberance with the stock price going past 900, and I noticed that a lot of it seems like it might just be because of the love for Elon, where that's the nervousness you face as an investor, where if you're just betting on Elon, what happens, God forbid, if something happens to him, he leaves Tesla, goes to space, whatever it is. So I love that you brought that up, that closing to when you were going to sell Naked, you had to separate yourself from the identity. I think that's a key point, because if you're building a brand based on yourself, you're a one-man show. You got to build something that you can sell, pass down to family, that doesn't necessarily just have your face. That's an amazing gem right there.
Yeah, that's a good point on Elon too. I mean, he's so hot right now. Like he's the guy. And yeah, you're probably right. There is a response to his mojo that's reflected in his market. At least that would make sense to me that there would be that correlation.
Yeah, absolutely. So awesome insight right there. I hope the audience so far, you guys are finding a ton of gems from Joel, just a lot of value there. Back on that concept of finishing, building a company, you brought us a lot of value there as well. So there's that process of building your business, checking the market fit, a lot of value there. Now, what about in terms of getting to the point where, you want to sell your company or you want to go public? What's the process there look like, where you want to decide, hey, do I want to go public market route? Do I want to sell it private? Can you walk us through that?
But both markets are changing quite a bit right now. So, and the reason I say that is because before it was like big IPO Reg A financing or angel backed, venture backed financing. In this case, maybe you had private equity buy in the private world. Maybe you had private equity family office buy you out, or you IPO'd later. And now, not that that's changed dramatically, but what you have is these nuanced changes where now in the public market, you have this interest from, we talked about retail and we talked about new retail being, through Robinhood and Publix, this democratization of investment where people can really, there's a lot more people to play in this space and there's a lot more people to introduce stories than your staunchy broker type thing, where I have a really cool broker and I'm sure there's lots, but that's the stigma, right? Is like,
Mm-hmm.
is there's one old guy or whatever who's been doing it for 30 years, who's the one recommending. And now it's like your Reddit forums and your TikToks are the ones recommending, and the access is to it is been made easier, right? You don't need to have a minimum of $1,000 or a minimum of $10,000 to start being in the market. Good and challenging. And then on the private side, you have crowdsourced financing, where now you can crowdsource, just like you could crowdsource an idea in pre-sales and Kickstarter, you can crowdsource a financing where lots of people can invest a little bit of money into your business. I think that the one that we looked at, and they're all a bit different, but they are regulated by the provinces in the States. It's as little as like, a couple, like $100 if you wanted, and you can get a stake in, and your investment strategy could be, I'm going to do 10 of these in the private side. So you have access on both sides. I have tended in recent years to start in some ways preferring the public market. Now, when I was Naked was public early and I hated it. But now being on the other side of it, but while I was public, I had so many more opportunities to raise money, and there were so many more vehicles of which to do it. And I didn't feel like I was totally at the mercy of an angel investor. Now, granted, being public as like a nano cap company can be incredibly challenging because you have added legal cost, you have added accounting, you have added compliance, you generally have added investor relations. So that extra money opportunity comes at the cost of these extra things. And further, as we talked about at the very beginning, if your stock is illiquid, it's not valuable to you to be public at all, because that currency that it provides, the secondary currency, isn't useful. But it just seems to me from where I've been that the junior markets have, they're incredibly risky, volatile, this bull market aside, but they just have a bigger appetite to fund deals because they have that mechanism of a liquid stock. Then, I've been through multiple angel processes and they're just as competitive, if not more so. And at the end of the day, it's like, there's not that many companies getting funded, right? So you have to be at a certain phase, but I really like utilizing junior markets to get ideas off the ground, assuming you have the wherewithal to run the thing. And that's probably atrocious advice, but and it could change. I reserve the right to change it, but I think it's a vehicle. And I don't know if I specifically answered your question, dude, on how to do it. Was that maybe?
No, I think you answered the question about the process and the knowledge there. So absolutely you answered it. But I guess the follow-up to that would be, how would you do it if let's say your company is doing 10 million in sales a year? Is there a process you go to say, hey, I want to go the public route? Is it your network, a securities lawyer? What's that process look like?
Yeah, I mean, it's so now we're delving into my business partner's hat that he wears, but essentially, if you meet the requirements of the exchange, so be that the Toronto Stock Exchange, the Toronto Venture Exchange, the Canadian Stock Exchange, which all have varying degrees of requirements, the NASDAQ, NYSE, the OTC, QB, Pinks, whatever, the Frankfurt. There's lots of different stock exchanges, and every one of them is going to have a different prerequisites, right? So some you might have to have $10 million in cash or $2 million in cash. You might need to have a certain amount of shareholders. Maybe it's 150 shareholders that you need inside the company. However many years of audited financial statements, however much cash burn, minimum stock price, they're all a bit different, right? And so you need a lawyer who's done this, a listings lawyer, a securities lawyer who has been on files that take companies public and does it all day long in their sleep. You need an auditing firm that puts your books to be listing ready, and you generally need some bank to back you, right? And then in Canada, there's plenty of broker dealers who do it. In the States, there's plenty of IBs. This is not like your Bank of Americas. I'm talking like boutique banks you've probably never heard of, that are the ones that are taking these I'm talking about junior caps here, not the Goldman Sachs that are backing, the Ubers of the world, etc. So you need, once you have these components in place, it's literally as simple as ticking the boxes. Do I meet these requirements? An exchange, you can reach out to the exchange and say, hey, we're doing this. And the lawyer generally can do all that for you. And they'll know upfront whether or not what do you have to do? Do you got to go get 50 more shareholders? Do you have to raise at least $2 million in conjunction to make this possible? But I guess the point I'm making is there are a lot of hoops, but it's by no means impossible. It's actually quite systematic once you dive into the details of it and just work against that agenda. And when NAKD went public, it was by no means in shape to go public, but because the intention was there and we knew what we had to do, we raised X amount of money. We found people to back it. We met 2 years of audit requirements, et cetera, et cetera. So it all got done. It just, took 8 months, and investors, especially ones who, are into the capital markets, it's what would you consider like an exact word off the top of my head right now, but it's an event that people look forward to, an event that people think will add value to the company. And so it becomes more financeable that you have this path and you're moving to this exchange versus saying, hey, I think we're going to do $2 million in sales next year. And, it's something that's very tangible for people to say, okay, I see we do this. And then all of a sudden it lists and now we're public. And then you have the joys of whether or not your stock is going to go up or down, and all the claims that you made actually play out. So I think that adds a lot of value to the audience and assurance. That I love that you said it was systematic, right? A lot of people might say, oh my gosh, there's so many things that go into it, but 2 years of statements, and who knows what the rules are now, whether it's 2, 3, 4 years, but the point is it's a systematic approach. So that's refreshing to hear. Obviously we see the benefits. You can make a lot of money when your companies go public, the popularity of it being on the exchange that comes with it, the promotion in that regard. But what's the downside risk to going public? Well, yeah, I mean, when you say that you can be famous. I think there's not that many people who get to be famous because their company's listed. I think that's few and far between. For every I mean, even Elon, right? Like how much it was it only 2 years ago, maybe even less, where he was having a mental breakdown
Mhm.
in the public eye because of short sellers and whatever else, and that was really tragic. And for every Elon, there's 10,000 other entrepreneurs who don't have the limelight but are struggling just as much in the ways of either being public or just the challenges mentally of being an entrepreneur and trying to grow a business. The downside is quite large but it's no larger than staying private. The downside is your costs have increased dramatically. One of my mentors once told me, you have to look at running two businesses. You have the business of being public, and you have the business of whatever it is you do, and both require people, capital, attention, effort, time, all of that stuff. And so you have all these additional costs. But the biggest thing for young companies, as far as a downside goes to being public too early, is that unless you're a foreign private issuer, which means you're in Australia, listed on the U.S. exchange, you're required to file 4 statements a year, 4 quarters a year, right? And so you begin, and if each quarter, let's say you show you're not profitable, or or your sales didn't increase to the level you thought they would, unless you're this really big idea like Uber, the market can punish you for that, where they might give you the grace of a couple of quarters, but then come that third or fourth or come year 2, you're not where you need to be, and your stock price keeps getting punished for quarterly results being bad, and you need to raise money, and you get in this vicious cycle where you start to operate the business quarter to quarter versus, so 3-month periods of time, versus thinking long-term, strategic, intelligent growth that's going to build a really rock solid foundation. I've seen this so many times. This doesn't happen in, like, if you're necessarily a biotech company and you're looking for a singular event, like, whatever, you built the vaccine for COVID. That's like a singular event, and nobody gives a crap about what it is until you get to that event. But if you're a product company, they care how many more people bought your stuff that month or that quarter, right? And so I've seen people make, and I've made, really bad decisions thinking quarter to quarter, and if my stock price dropped because my quarter dropped, well, then if I have to raise money, I'm raising money at a lower valuation and than I previously was before. And it can have a really a negative spiraling effect if it's not managed correctly. And that's where it comes down to, can you manage your shareholders' expectations? Are they in it for the long game, right? Are they long with you and they don't care about what's happening because they believe in this? And that's the quality of your shareholders makes all the difference in being public early and forever, I think.
Yeah, that's a lot of insight right there. That's awesome to hear, and awesome, but also brings the reality, right, of it's not all the limelight when you're going public. How many years, as you were the founder, but also CEO, how many years were you doing those earnings calls and listening to analysts?
Yeah, I think 2012 to 2017 or 18 was when I was doing those calls. Um, and again, the plus side of that is that there's a lot of exposure for your product. Forget you as the CEO or whatever, but like, I think that at some point half our customers for the underwear were investors.
Wow.
And it was in that sense, it was almost free marketing for a product like ours, where an investor wanted to support his investment, or her investment. And so they'd buy some product for their husband or their wife, and they became champions of the brand, right? And those earning calls and investor presentations we do at conferences, et cetera, were all chances to not only promote's not the right word, update and share what you're doing with your company, but also to get people wearing your product, which
Yeah.
is, at the end of the day, what matters. right?
Yeah, yeah. What was more stressful, when you started the company or when you were actually on a public market and presenting to shareholders?
Uh, we, we have this, like, I always say that our histories, so, what we remember about the events of our lives, are always viewed through the lens of how we currently are feeling. It's a present perspective of the past, and therefore the past is always changing. And so I think that was always morphing for me. It was always, and in hindsight, I think if I look all the way back at this moment in time, it probably seemed less stressful when I was in the startup phase than when I was public. But when I was public, it certainly seemed, you know what I mean? Like, it was
Hmm.
just, it's always morphing. But the bottom line is this comes back to that mindset and foundation work. It's all really hard work. It's all really stressful work, but it's about our relationship with that stress. How solid are we in ourselves? Do we look at this problem as the end of the world, or do we just look at it as a single thing that can be dealt with if we just block and tackle and not get caught up in the drama of it, right? We always think, I think a lot of us human beings, especially in the social media age, think that there's this, like, spotlight on us, that the whole world's watching. The whole world's not watching, unless you're Elon Musk. And even if you're Elon, the whole world forgets just as quickly as they threw you under the bus. They're back to being your champions, and so that spotlight's not real. And if we operate without that spotlight, that illusional spotlight, we can just get through it all. And even if we can't see the end, as long as we keep moving forward, we will, in our businesses, find ourselves in a better place. I know that to be true for myself and for so many entrepreneurs, right? It's just, I'm not going to worry about this. I'm just going to do what I can do and keep moving forward. And
Yeah, yeah.
yeah,
I love that you said that, because even me, for example, I thought about the other day, I'm scared if this fails, I'm scared if this doesn't work out. Then I remembered, oh shoot, at some point we're all gonna die, right? Who's gonna remember this? People barely remember what happened yesterday. Or, I know social media makes it seem like things are there forever now, but I just love that you said that no, not everyone's watching. That anxiety that we're having about the whole world's watching us and they're laughing at us. I just love that you said that, Joel.
yeah. There's a great book called The Denial of Death, or The Death Denial. I can't remember. Ernest Becker. He won the Pulitzer Prize for it. And I mention it in my book, because he talks about legacy, this idea that, we're living our whole lives to create a legacy to be remembered by, are like they're denying death projects that take us out of the present moment, that take us out of the moments with our loved ones, take us out of what's really important, because we think in our minds we're creating something that, we're going to leave behind, when, to your point, most of the time we don't remember anyone's legacies unless they're your closest family, and they're Michael Jordan. Right? I mean, and he's still alive, but, like, the point is, most of our legacies just fizzle and fade off. And it was an illusion to think that we were going to live. Oh, that's what he called them, immortality projects. That the work of our
Mm,
life was this immortality project, when it's not. And we're dead. So like, we don't even get to see if it worked. And it wouldn't matter if it did. And for me, the biggest realization for that was when, in the midst, not in the midst, but in the latter half of NAKD, my best friend died. And he had two kids, my girl's age. And it was just one of those moments where, you just are rocked. And I share this story in the book too. And it's a story from September 11th, when it was a woman who was sharing the account of her husband in the World Trade Center when it went down, and he was in a stairwell, and he knew it was going to go down, and he called her, and they talked, and stairwell was filling with smoke, and they didn't talk about his work. They didn't talk about his success. They talked about love. They talked about family. They talked about their life, the moments that mattered most. And that's what she's going to remember with him. And so those events literally happened very close together for me. And it just helped me again remember that NAKD may or may not work, and it sort of worked. It's not, it's not Victoria's Secret. It's a little underwear company that that meant a lot to me, but in the end, it's a fleeting thing. All our businesses are fleeting things, and that doesn't mean don't pursue them. It doesn't mean don't follow your heart into your business or feel passionate about what you're doing, but it does mean don't think it's the only thing, and don't think that it's going to be there to hold you when your wife or husband leave you, because it's not, right? It's not that thing. It doesn't care. And your business contacts, some of them are real, like in the sense that they'd be there to hold you. Most of them aren't.
Yeah. That's just that's so powerful to hear from you. And I think, number one, sorry again about your best friend. I know it was some time ago now, but that's tough to hear. But it just goes to show the reality of what you bring up, that we're all chasing this dollar value. That's what we want to chase, not realizing that love is the most important. So you share the story of your best friend, and you share the story on the day of 9/11, and it kind of grounds me, and I'm sure the audience listening to this get grounded by it. It's also the reason why I launched a podcast like this. I ask myself, it's cheesy, but I ask myself daily, what am I doing today to leave an impact for tomorrow? If something happened to me today, what do I leave behind? So even when I first launched the podcast and I was getting some of those hater comments like, oh man, there's so many podcasts out there. You got one freaking download, you suck. This and that. It doesn't matter to me especially when someone can go and listen to this podcast with you, and maybe they're chasing money, they're having a hard time with their wife at home, whatever the heck it is. And to hear the impact and powerful statements from you and others alike, I think it just goes to show the power of human nature and love and gratitude and being ingratiating, and not just looking for that dollar amount that society, that Wall Street, that all tries to push. So thank you for sharing that.
Thank you for sharing what you just shared.
Thank you, Joel. And I was going to ask you a question on the side of, before we transition here into the college side on the closing for the Gen Z audience. I was going to ask you, but this was a very powerful moment. But my point I was going to ask you was the funniest or moment that you had with an analyst, because a lot of people, it's a love-hate relationship with these analysts, man. Can you share with us something that you had a funny moment, or, I use the word funny, but an annoying moment, something with an analyst that you could share with us?
Oh, dude, I that's a very specific question. The You see, the thing about analysts is that, like, I had to pay all mine. Like, that we were not at the level, maybe at the very end, but where banks were giving free coverage, where they were banking a deal, and they were willing to give guidance on pegging NAKD's valuation to a certain number. So all my analyst reports were like that we ever did were A, we had to pay for them, which is disclosed, and B, they never like really said anything. like you know what I mean? Like, they tell you what the business did, but they didn't actually say the thing that an analyst is supposed to say, which is, I think this stock is worth X. So I guess the funny thing is that they were all just wallpaper at the end of the day.
Yeah, that's actually interesting to hear, because I always talk about in these stock rooms a lot, as people are saying, oh man, the analysts, they downgraded Lyft, but they upgraded Uber. Well, check out Morgan Stanley again, see who underwrote Uber and see why they might have downgraded Lyft, right? I always say the analysts are supporting whoever's paying for the steak dinner. And so to hear that at the end of the day, it's kind of the point, right? They're like publicists in a way, right?
Well, yeah, I mean, there's what they call the Chinese wall. So let's say that a bank, not a Morgan Stanley, but whatever bank, invested in and took my latest company public. Okay, so that bank is invested in my success. Now, technically, the analyst research department of that same bank is not supposed to talk to the banking side of that bank, right? There's an invisible wall to maintain independence, but it's the same bank, the same company that's providing the guidance on, so this idea that there's actually a wall there. And to be fair to anyone who I've ever banked with, they certainly take it very seriously, but at face value, you're like, but it's the same company. Like,
Yeah.
this is an open concept office. He's
Yeah.
not that far away
Yeah.
from it. So
Open concept.
it's one of those things where, going back to the Wall Street bet side of things and this whole conversation, it's like, it's really, the way it's been done is not so great. I'm not saying Wall Street's bad or the enemy. I've done a lot of business with Wall Street, but it's not, now that they're saying, well, you can't do this in a message room. It's like, well, how good is the advice we're getting? How unbiased is the advice we're getting from the banks and the brokers? It's all or they're all trying to drive their own agendas.
Yeah.
It's in the mandates of they all have their own shareholders. They all have their own investments that they want to succeed. And so we can, they become self-fulfilling prophecies in many of the times. And that doesn't mean that the advice is bad.
Mhm.
An analyst report can be very good and they can give very good reasons, but it's still not truly independent in my mind.
Yeah, absolutely. Yeah, I agree 100%. Uh, Before we transition here, your company, Naked, was one of the hot topics on the short squeeze, Wall Street bets stocks, right? With GameStop, AMC, and many others. What's your whole take on the Reddit Wall Street bets versus the hedge funds versus Wall Street situation?
Yeah, I think that my biggest hope there, and I honestly haven't followed it too much because as I always say, I'm not a trader. I'm not a day trader. I am an investor, but I tend to invest in the companies that I'm associated with so that I can in some way be helpful to their growth and be part of, their destiny. So it's not a world that I live in every single day. It's a world that I've been on the other side of. And the best thing that they haven't had that trial yet, have they? With
So it's
Vlad.
started now. I know Robinhood CEO and Reddit CEO are testifying shortly. I don't think it's started yet though.
Okay. Yeah,
But he's hiding, by the way. The Robinhood CEO, he's getting death threats, so he's in a hotel as he waits to testify.
I feel like that guy was in between a rock and a hard place. I don't know if he ever could have prepared himself for what happened. And I'm not saying he did the right thing or didn't do the right thing, or we don't even really know what he even did other than, yeah, we know he stopped the buying, right?
Mhm.
But there's just so much there that I think I always say we need to not be reactionary. We need to call it out, but then we need to give people the chance to explain before we send a guy a death threat, and I understand people got left holding the bag and that's serious. And I can't imagine that Vlad is impartial about that. Like, I guarantee, at least I hope, that he's carrying that emotionally, that,
Mhm.
that he knows what was at stake and the seriousness of it. But so to get back to the point, uh, the best I think we can hope for is reform, especially with short selling, especially with naked shorts, not naked the stock, naked shorts being like longer than
Mhm.
the actual available long positions to call on in the company, right? So that type of stuff is, is questionable, right? Why? And I've always said, I understand that shorting has in some cases exposed bad actors and foul play amongst public companies historically, and has provided some balance in that regard. But I really think the markets, both retail and Wall Street, need to be pro entrepreneur, because and that's the one thing I haven't seen in any of this is the conversation of like, what about the business and the entrepreneur in this whole Wall Street versus Reddit thing? That's all on the side of the investor, and it's the entrepreneur that is the one, they're the ones stuck in their own company, in the sense that they're not making, in a lot of cases, they're locked up. In a lot of cases, well, they're only trading on, predetermined dates. They're not benefiting necessarily directly from the rise and fall of a stock. That is obviously not always the case, but certainly a lot of the time. And so it's like, how do these games, the point of that is, how do these games, short selling, betting on a company's failure, how does that make the world a better place? How does it make entrepreneurship the thing that's driving innovation and jobs and all these, driving Main Street as well as Wall Street, all these things, how does that serve them? And so again, I'm biased, but I just hope that at the very least we get some short reform. I think at the very least, when we look at what I think is a positive thing with the democratization of trading through Robinhood, that they also understand their responsibility as educators. It is the job of the investor at the end of the day, whether you're putting in $50 or 50 million bucks, to educate yourself and make the best decision possible. And I think it is in part the job of the platform to ensure that that is happening. But I'm kind of rambling here, dude, but and it's because I haven't necessarily come to a concrete place in all this, but I can't not be a little bit inspired by the Wall Street Bets community and just showing what can be done with the tools of today and exposing what was a very, being, like, to be that vested in a company's failure and to be a hedge fund that just doesn't smell right to me. So I'm not sure it's a revolution, but at the same time, it can still be one if we make good decisions as a result of what has happened and what we learn from it.
Yeah, I love that you said you're inspired by that community because although not a revolution yet, we can make Main Street normal. We can build wealth and generational wealth in normal middle class by investing. I guess the one area of caution that I like to tell people is if you treat this market like a casino, at the end of the day, you're going to get casino results, whatever you're trying to do. And, spoiler alert, the second half is tragic. There's a reason why casinos still have their lights on, why they're still able to pay the dealers. The house always wins at the end, right? So I think that's the important thing. But I love the insight that you brought from both sides. You didn't just say, F Robinhood, or I just love the Wall Street Bets guys. You see both sides. And I think it's important to remember Robinhood as the CEO, as the person on the biggest stage, just like when you were at Naked, you have decisions you have to make as a business. You have investors, you have people watching you. You don't just make the decision yourself, right? You have everyone telling you what type of decisions you got to make, right?
Imagine, again, I'm not justifying what happened, but imagine like the worst time in your life when 10 people at once were telling you what to do and 3 of them had guns to your head, and just put yourself in that position. I mean, okay, so what do they raise? Not total, but that in that one moment, $1 billion or
That
2
one moment was 1.2 billion about.
1.2 billion. Unprecedented, right? It was the shortest period of time that amount of money had ever been raised. That was not done lightly. Okay, so and there's been lots of valid reasons to why that might have happened or has happened. But to knowing what I know about raising $1 million or 2, and the amount of emotions that come into a boardroom, and not just the directors that are in that room, but the phone calls you're getting from other people, etc. And you just feel this incredible weight, and it takes a lot of courage to make a decision, whether or not that is the right decision. And I'm sure, again, like, I think that we just need to play it out. And he may have messed up, or he did mess up, but I'm just saying there's a lot else. There's a lot there to unpack. And that's the problem with so much of what we do right now, is we always just shoot from the hip and condemn. And even when we know in our own lives how many factors play into one simple decision that we make. And the reason we do that is because we're just you know, we don't feel great about all the decisions we've made. So when we have a window to kind of release a bit of that, we do it to our spouses, we do it to our friends, like we,
Hmm.
you know, and generally your spouse or your friend, they're a safe person to do that with. But when you do that social, that's out there, right?
Yeah.
And that person on the other side doesn't get to hear your voice. They don't get to, you know, he doesn't know that he may have cost you a lot of money and that you didn't have to lose. And I just, yeah, I guess I'm sure a lot of people don't like to hear what I just said, but that's, I try and always give the benefit of the doubt until I have all the pieces that I possibly can have. And I'm a little worried that in this situation, we're not going to get them all.
Yeah. Yeah. And I think, even as you mentioned, even if some people don't like the answer that you gave, uh, you're giving impartial answer. You're being fair, and you've been in the shoes of, obviously not of the size of a Robinhood company. Still, you've been in those shoes, understanding that perspective. So thanks for sharing that. I think it's an important perspective. You're not just a Reddit user, and again, nothing wrong with that. But I'm saying you bring the value of being on Wall Street in terms of having shareholders, having those guns to your head, quote unquote. So thanks for sharing that perspective here. Um, as we transition here into the conclusion, this is a little bit on a different topic, but you provided so much insight, so much value. Definitely coming from a podcast where I just finished up with the mayor of Miami, this is so different, and I love how different it is because you were able to talk to us about that IPO process, gave us an entrepreneurship masterclass, just a lot of gems there. But as I told you, with the Gen Z audience, I have a lot of college kids who watch this and listen to this podcast, especially on Apple Podcasts. Um, so I like to ask every guest in some way is, what's your, let's say, Joel, right now you're giving your commencement speech to the college grads. They got you on that stage right there, in 30, 60 seconds or whatever you're comfortable with. What's your advice to college grads? They're just graduating 22. They're entering a world now where obviously we saw tech has dominated. With COVID showed the power of companies like Peloton, Zoom, Microsoft Teams, like you and I talked before the podcast. But we're still freaking out, man. We're like, what's next with our life? We're 22 years old. What the hell do we do, Joel? What's your commencement?
Is this a what the hell do I do with my job, with my money, or how would you
So a lot of us, when I got a lot of DMs about this podcast overall, is they feel that post college depression, which is, I just had structure for 4 years. I was living
yeah.
at home with mom and dad, home cooked meals. I had my dorm life. I had my parties. Now I got to go get a job. But wait, what type of job do I get? How do I make money? How do I spend that money? What are taxes? What's the LLC? There's all these things going through our heads that unfortunately a lot of times college didn't teach us. We were in
Mhm.
history 101, right? So it's open to you, as you're the subject matter expert in many regards. So whatever take you take on that.
Yeah, yeah, our system does fail us in many ways. um the fact that we don't know anything about investing. Let's say we're not in college, but that's we learn the recorder. At least in Canada, we learn that little recorder, but they don't tell us anything about the damn markets. Like, this is not going to be super profound, but it is the way that I've lived my life, is that seek ex- seek experience and see where that takes you. And when you do that, seek it with this incredible openness, because, okay, yes, if you need to learn about taxes, it's not that hard to learn about taxes. It's not that hard, at least to get a basic level of anything that you want to earn. You are in the age where it's all at your fingertips. Okay. So that part is pretty easy if you choose. But the more challenging part, because we go back to almost the beginning of this, when I talk about these concepts and labels, and you're coming out of college, and let's say you got a degree. Well, okay. So now do you think that you're in this box where that degree defines, you know, and, technically that degree does matter in terms of being employable. But when I hire somebody, I go to, like, what has your life been like? And how have you responded to the events of your life? Have you traveled the world? Have you had incredible heartache? Have you had loss? Have you um have you tried things because, even though everything around you in your environment said don't do it, your heart said yes? And even if you failed, you were okay because you learned. And your life becomes this beautiful series of events that, because you were open-minded, you got to learn a whole bunch of new things. And that's the person I want. That's the person I want to come work for me, is the person who learned how to overcome loss and knows what that feels like, and didn't just stay in their comfort zone. It's okay to want to be structured, but when we push past, I say, like, you don't get fitter as a runner, as a weightlifter, as a whatever, by working out in an easy way. You get fitter when you push yourself beyond where you thought you could go. And it's the same for everything we do. And so I want to see someone who's actually gone out and cast all these fingers. I know I'm going long here, but I'll kind of describe it like this. Like, imagine you're the rain and you have rained down onto the top of a mountain, and your goal is the ocean. So let's say the ocean is your ultimate career and happiness that you're going for. Well, there's a long journey from the top of that mountain as the water, as it starts as a drip and it becomes a creek and it becomes a raging river, and that raging river has to, like, blast through rocks, and it goes in and out. And you've all seen, like, when water's trickling and it puts out these feelers into different ways and see, hey, is this the way I should go? And it's like, nah, I'm not. And it kind of, but ultimately it all finds its way to the ocean. And so no matter what, when you look back, do you want it to just be this straight line, or do you want this whole bunch of life experience that's taken you there and carved this beautiful path? And so that would be my advice, is I hope that's okay, Mir.
Joel, that was amazing, brother. That was amazing. I'm just sitting taking it in. I especially love hearing. I listened for keywords, and I love that when you talked about when you're hiring people, even you're not talking about specifically the GPA, the minor, the major. What have you gone through? What's your experience like? How did you deal with tragedy? I think that in itself is a commencement to understand that you're not defined by that one degree, whether it's Harvard or whether it was community college. You're not defined by that, but we all have this. We all have, just like you brought up earlier in the podcast, the effort. We control our effort and our mindset. So that was actually a phenomenal answer. So thank you.
No, my pleasure. Thanks for putting up with me, Mir.
Thank you for putting up with me. So I think this again, we always talk about it's mentorship in your pocket in an hour or less. I'm glad that we went over, because there was so much insight, and just the fact that, as busy as you are, you took the time to stay even longer. It's so much appreciated. And to the audience, if you're listening to this podcast in the car, at work, or if you're watching it on YouTube, send a DM to me or send a DM to Joel and just thank him for his time, because I hope you guys found as much insight as I did just interviewing him on this podcast. Joel, share with us, where do we find you on social media? Share with us where we buy your book. What's your social media handles? Go ahead, please.
Thank you, sir, for that. Joel.primus is Instagram. Joel.primus.com. No, sorry, joelprimus.com is the website, and the book is, you can find it on the website, just /book, or you can find it on Amazon, Getting Naked: The Bare Necessities of Entrepreneurship and Startups.
So I ordered my book, and it's going to be here tomorrow. Amazon likes to play games with me. They say it was Prime shipping, but I don't know how Prime it was. Correct me if I'm wrong. When I was looking at the preview, the book actually walks us through a lot of those steps of launching the business, right?
I literally, I'd say two things. It's a how-to from the time that idea comes into your mind to selling your business, but it also outlines all the questions that I think you might not know to ask if you're a first or second time entrepreneur, or at least I didn't know to ask them. And I always say, the better questions you ask, the better answers you get. And so I try and give you those, in case you didn't know, all the way through. Do I raise money? Do I take on a partner? Do I sell my business? Do I step down from CEO? And I kind of give some context as to how those come about all throughout your startup. And it kind of weaves you through some pretty wild stories on my own river's journey to the ocean. So
yeah, Yeah,
Yeah.
that's awesome. I'm so excited to read it. I'll let you know after I'm finished with it. Just one more time, real quick for the audience, the website, because I know a lot of people might go directly to your website to buy it. The website, one more time, my friend.
It's joelprimus.com. JOELPRIMUS.com.
Awesome. Thank you guys. Go read his book. Buy the copy and just read it. There's so much value there. If you guys found value, especially in this podcast that we did, go support and read the book, because I guarantee you'll find even 10 times more value when he walks you through these questions and the business. You said Primus. I keep thinking of Optimus Prime for some reason.
If I had a boy, I was gonna name him Maximus Primus. Would have been a good name to mess a kid up for his life, I'm sure. But
They would have loved that at school.
right.
So, everybody, thanks again for coming back to the More We Know podcast, where our goal here is to provide you mentorship in your pocket so you can listen from anywhere, from experts all around the world. Today, we had Joel Primus, who provided us a lot of value, and we covered a lot of different topics. So go follow him on social media. Go check his book out. Again, I'm your host, Mir, and thanks so much. Make sure to subscribe on Apple, Spotify, YouTube, and Google Podcast. The more we know, the more we learn, and ultimately, the more we will earn. Thank you, guys. Thanks, Joel.
You're welcome. Thank you.